Target Trading Academy.
Good afternoon, everybody. Preston Vogl here at Target Trading Academy with today's Micros Market Recap. It is Thursday, March 16th at the close of New York. Let's get right into it. Oil didn't open gap down or gap up. It actually opened in its range from yesterday, not terribly far from that close. That close was, my drawing tool is not working right now. Let's see if I can get that. There we go. That close was just above, so we initially had a little bit of a sell-off. Oh, sorry, no, my bad. The close was just below, so we initially had a sell-off. Got the close, had a little bit further of a move down, came back up, used that edge as resistance, and then it came farther down. And then at that point, buyers stepped in and said, no more ground to be given. They've been driving it lower for how many days now? I mean, we have a huge void of space between the prior contract low and the high from yesterday. So this is on traded for at least a day now. But ultimately, they are finishing positive on the day as they have brought that market back up higher than the close from yesterday. Now, gold, well, what did we say? Gold so far has been going gap up or gap down for a day and then sideways or just playing inside the range from the day prior. And then the next day, gap up again or gap down, whatever direction it's been heading. But recently, it's been gap up for the past few days. And it's every other day, one day gap up, and then the next it just sits and goes sideways for the most part. Well, what happened? Yesterday I said it. We might just see it. Doesn't mean it will happen, but we had that same sort of scenario. We didn't leave the range. We did have some extension outside, but it was quickly swept up. They brought them back in, and we closed down below the close from yesterday. So we had a little bit more extension than we did the 2 days ago, where it just was pretty much just sideways. You can see the response at these levels and how they held and rejected on both support and resistance. So if you are interested in learning more about these levels, remember they are drawn the night before. Yeah, you heard me right. The night before the next day's trading activity. As far as our equities go, well, that was a different story. We opened inside of the range from yesterday. And then it's just this, I think it was like the first hour or so. It was just slow as can be and very grindy and very choppy. And then out of nowhere, no news or anything, the market just started going higher. And you can see here, we have this very consolidated first hour, and then they just, boom, volatility entered. You have to be there to see the market progress. You can get some sense by looking at the time below in the consolidation. I mean, from here, that's 10:05 to 10:22. That's good 20 minutes, if not more or less. But from here, 10:40 to same 22, let's say 20 minutes, 11 o'clock, right here, you can see how much more progress they've made. Instead of going sideways, they actually had a direction picked in the market. And so buyers took charge, and they just kept climbing and climbing slowly but surely. They kept climbing. You can see, again, the response at those HVA edges and how well they held, especially on those first-time scenarios. But ultimately, they reached a cap. They couldn't go any higher, and they've tried several occasions, but that's where we are right now, just finishing top-heavy in our equities on the day. So it was, again, that morning was just, first hour was just brutal. Nothing really there. You can see it in the NASDAQ pretty clearly, that first hour right here. Although in the NASDAQ, I would say today had a little bit more participation than the micro ES or the ES for that matter. The past few days, the NASDAQ hasn't really been moving a lot. It's been very consolidated, very congested. But today, even in that first hour, it had a lot more width and spread than the ES did. And it's good to see that the volatility in the NASDAQ had somewhat returned to normal. Now, again, all of this is this choppiness is most likely due to the consumers trying to sell the market logically because of the bank failures and the global banking crisis that's going on, while not really getting the hint that who controls the markets, right? It's those same big banks. Do you think they're going to want to drive the market down? No, they're going to give you that false illusion that, everything's fine. We're just going to keep driving it up. Then they're going to manipulate the price wherever they want to be. And that's why we don't trade off of news or speculative information. We trade what's in front of us here at Target Trading Academy, and the methodologies that we teach reflect that. So moving on, again, even though that first hour for the NASDAQ wasn't as congested as the ES, there was still a significant amount of congestion to be seen. And around that same time, you had that same explosion right here. You can see it a little bit, or right here, a little bit more clear. The volatility just starts picking up and those directional moves kick in. So we did have a lot of buying presence today and ultimately made some new highs on the day, obviously, and closing out higher. So net positive in the ES, in oil, negative in gold. If you're looking for more information about these levels or about the methodologies that we teach in our rooms live every day, feel free to reach out to us. We are Target Trading Academy. You can find us on Facebook or go to our website at targettrading.co. Again, that is targettrading.co. Get in touch with a consultant at either location. They'll gladly show you what we do in our rooms each and every day, and you'll be able to see for yourself why we are the #1 trading education company in the world. We look forward to seeing you there.